John Manley, have people been asking you all day, why did this happen?
Well, a few did. I'm not sure I had the right answer for them, but I mean, more sellers than buyers is the end of the day.
What was the reason, do you think?
Well, I think it was oil. I mean, I think the people are getting concerned. The price of oil is down by 50%. Now, longer term, that should be a great thing. But over the short term, whenever something as pervasive as oil gets cut by 50%, somebody invested on precepts that are no longer really in place.
So they have to go back and redo all the figures.
They have to go back and do it. Can they pay them? There's going to be some disruptions. I mean, that happens. And I think if people, what we used to call wrong thinking, people may come to believe that this is going to derail things. I don't think it is, but it's going to make it a little bit bouncier along the way.
Carl Riccadonna, do you agree?
I think we are 1 part Greece, 2 parts hangover from the Santa Claus rally, and then 2 parts oil move as well. So it's really a combination of factors. If we look at where the market is today relative to where we started December, things don't look all that bad. So as much as the Santa Claus rally maybe didn't make sense, today's move doesn't make sense to the same degree.
All right, well, I want to get your reaction to a comment that was made by Jeffrey Gundlach of Double Line Management today, having to do with the 10-year. Listen to this. He said that the 10-year Treasury would trade under 1% if oil went to $40 a barrel. What do you think about this? If oil falls to $40 a barrel, the 10-year Treasury goes to 1%.
I think it depends on the time horizon. I think that it's very realistic, given the overproduction in the oil patch, that we could see oil prices temporarily fall below that level. But at that level, then a lot of production will the plug will be pulled, and you'll see a recovery. If it's at that level for an extended period of time due to
what's an extended period of time?
Let's say the first half of the year it averages at that level, then that tells us we have a much weaker global economy, and that would justify that low level of yield.
John Manley?
Well, I mean, I think it's a little bit of a tautology to a certain degree, because if the things that would drive oil to $40 a barrel would probably not be helping the economy along either, and people are going to worry, what does $40 a barrel mean for the financial stocks and all these other things? So I think it could happen, but I think Carl has a good point. I don't think it stays there. I'm not so sure that when it gets there, we think it's not going to stay there. So the problem is you can get yourself all worked up. You pointed out quite rightly about how tough these things can be. You have these sort of collapses internally in the market every now and then this year, and then the market comes right back. So I don't think you believe every single day's action in the market. I don't think it's really telling you that much.
If John Manley had the warehouse and could store oil, would you be going out and buying barrels of oil priced at around $50, $55?
I'd start now. I mean, I probably would have started a week ago, to be honest with you, but I mean, I'd start now. I mean, I always fall back on the equity strategist, so I can dodge this question, but I do think it's overdone. I think it's sort of it's got a head of its own right now, or a wind of its own right now, and it's moving forward. So I think there is overproduction, but I think that's to a certain degree to be expected.
Noble Energy, Transocean, Anadarko, Exxon all falling today. Carl Riccadonna, who is the price of oil declining? Who's it good for?
It's good for anyone who is a net importer of oil. So it's good for the U.S., it's good for Europe, it's good for Japan, it's particularly good for China. So a lot of crucial economies are getting a significant economic stimulus right now. A little bit more specifically, if we look at the U.S. economy, who is it good for? Working class and middle income households. So it is really economic stimulus directed toward the demographic that has lagged behind in this economic recovery.
John Manley, buy the dip?
I think so. Let it dip a bit, but I still buy the dip. I think it's going to be higher by the end of the year.